Now, Escorts Kubota released numbers. Net profits for the company in the fourth quarter came above street expectations. The revenues were below, margins were lower, but they beat expectations. That's the point. Bharat Madan is Group Chief Financial Officer at the company. Is joining us right now to take some questions. Mr. Madan, good to have you with us here. Good morning. Operating profit margins expanded some 250 basis points on a quarter-on-quarter basis. They're almost at about 11% or so. What are your expectations in the first quarter that we are in and for FY24 on the margins front? Will we continue to see improvement going forward?
Yes, I think as you saw in the last quarter in Q4, so obviously there's been an impact of the softening of commodity prices and the impact of the price increases which was taken in the earlier quarters. So you saw the full impact in coming in this quarter. And some better realizations also actually helped us in improving this margin now. And I think the margin was very good across all three segments, so including construction equipment, which used to be a low margin business, has also turned around. And the demand has been quite good. So there again, we saw a very good trajectory on the margin front. So I think across all three segments, we look at, I think, the way forward, the way the commodity prices are going. I think we only expect the margins will continue to improve.
Could you provide us with some guidance, some numerical guidance, Mr. Madan, or is it not possible? Also, run us through what you're expecting on the top line. Will you grow that early double digits, or will that be in single digits growth, FY24 over 23?
Well, I think it will vary from segment to segment. So if we talk about construction and railway business, both are doing pretty well, and there we expect the double-digit growth will happen on volume front. On tractor industry, right now, looking at the current scenario and the guidance on the monsoon, so looks like it will be a sort of mid-single-digit growth, which looks a possibility, even though the start of the year hasn't been very good because the festive season shifted to March this time. So that's why April was muted. So maybe Q1 was already sitting on a very high base, so may not see that sort of growth. But going forward, we think we will be able to make it up. So I think at a company level, it will be, I think, closer to double-digit, high single-digit to closer to double-digit.
High single-digit, double digits on what? That's the growth line, growth number. Top line. Mr. Madan? Oopsie daisy.
Mr. Madan, can you hear us?
Yeah, I think he's back. Yeah. That's on the top line. Got that. What about if you could tell us about the domestic market share, sir? How do you see this number panning out? What kind of a growth number are you working with on the tractor segment itself for this year? And also, as you said, all the three segments, there is some improvement on the margin front. On a blended basis, what is the number? What is the broad range we should work with? So market share and blended margins.
So market share, if you look at last year or so, even though the wholesale number doesn't really show the side of market share growth, but in the retail side, the registration data does show there's been a growth in the market share for Escort. Even the last year, we had close to 1% growth. And in April also, we've seen almost 2% growth coming in the registration numbers. So I think retail data looks quite good on the market share front, and we expect that growth momentum will continue in the coming year on the tractor space. I think on the overall number, if you talked about on the share of market going forward, so definitely, like you said, the industry trend has been positive, and we expect Escorts will continue to do well on the market share across all three segments, I think both on construction, railway, as well as on the tractor space.
Okay. Overall volumes, domestic volumes were actually lower in April. I think they were down about 6%. Do you see that phenomena turning around? I know we're just in 10 days of May, but what is the sense on demand across segments as we're looking at the rest of Q1?
So April was low because we had a festive season this time, which fell in March. So that's why earlier there used to be channel stocking used to happen in March. But this time we did correct the channel inventory in March itself. That's why we saw the market share taking some dip. But in April we came back, and our market share was better than the industry this time. So the industry was much higher in April. But I think going forward, the way things are, obviously there's some impact of the unseasonal rains which has happened in the last 2 months. So in certain pockets we are seeing that impact. Even the harvest side we had some impact there. But going forward, our expectation is this quarter probably can be a flat quarter because the high base, which is already exists. But going forward, recovery may happen. And obviously, it all depends on how the monsoon distribution is. And if it's really the key states, 5-6 states, which are contributing 40-50% of the volume, do get a rainfall, so then definitely you'll see a better trajectory coming in, on the volume front.
All right, Mr. Madan, if you could tell us, the street is fearing about El Nino. And they're fearing that maybe we could see a year like 2015, when you had a degrowth in the tractor industry. I think it was a double-digit degrowth. What is the channel inventory levels telling you, at least as of now? And what kind of analysis have you done so far with regard to a potential El Nino?
Well, frankly, we don't see a major impact. I think if you look at the initial guidance, both from the private forecasters as well as from government agencies, I know the gap is not much. One talking about 94% of the long-term average and another saying 96%. So I don't think it's going to be a significant impact on the agriculture demand. And second, the infra growth is doing very well this year. So in the non-agri use of tractors will actually slowly make up, for any shortfall which you see coming up from the agri side in case the monsoon is not good. So, frankly, we're not really much worried. I think the base is very high for the industry. Even last year, we had a record industry which crossed 1 million units between domestic and export. And this year, we expect to be marginal improvement which should happen. So, we're not really much worried. But yes, you won't see the side of growth you've seen in the past 3-4 years, going into double digits. So, that may not happen.
Mr. Madan, with the Kubota, is everything, what kind of help are you going to get from them in terms of expanding the network, outlets, etc.? Is all of that on track?
Yeah, so right now focus I think is on improving the back end, both on the operation side and product development side. So we're getting a lot of help from them. They're implementing Kubota production system in our factories. So I think major changes will start happening. I think both the quality improvement is going to be significant from the way it used to be. So that definitely will have an impact on the customers too. The perceptions are going to change, and that will actually help the sales team too. Growing the volumes and market share going forward. So on the product development side, there are many products in the pipeline, and I think in every year we'll be launching some new products, which is planned under the midterm business plan for us.
All right, Mr. Madan, the last updated number that you've given for April, the exports, though they contribute single digits to your total sales, there was a big degrowth, down 50%. 300 units versus 600 units. What happened out there, and what kind of an exports contribution you're working with for FY24?
So we had some supply chain issues in April. That's why the export numbers was muted, even though we had a high order base, more than 800 tractors order book was there which we're carrying, but we couldn't export. So that will get executed in the coming months. And this year we are looking at 25% growth in export number over FY23.
Okay. Mr. Madan, just a final question on the margin. You've ended Q4 at around this 9.5%, which is, way off the levels of last year. You also say that it will be difficult to get back to growth levels that were seen in the past. Can you leave us with some sense of FY24 margin trajectory? What can the market expect?
So I think we are aiming for getting back to where we used to be pre-COVID levels. The last 2 years were obviously exceptional. During the COVID period, the margins had gone significantly higher. And then suddenly, because of the inflation, the market dropped. And the margins dropped. So if you leave aside the last 2 years, if you look at the margins till FY20 is what we are looking at, which is a pre-COVID level. So internally for tractor business, we are looking at 13-14% sort of margin, which used to be the normal level for tractor industry. At the company level, closer to 12%.
Okay, so 13% tractors and 12% at the blended company level. Got that, Mr. Madan. Thank you very much for joining in today, taking this quick call and giving us a sense on the business. That's Escorts Kubota.